Welcome to Mauuak Saving Tips. Have you ever wondered why some investors spend hours studying charts while others dive deep into financial reports and earnings statements? If you're just entering the world of investing, you've likely come across the terms technical analysis and fundamental analysis. But what do they actually mean, and which one should you use? Today, we are rediving deep into the battle between these two popular investing strategies to help you decide which one suits your goals and mindset best. By the end of this video, you'll know exactly how each approach works and even how to combine them for smarter decisions. Let's start with fundamental analysis. This is all about the business behind the stock. Investors who use this approach believe that the real value of a stock comes from the company, its financial health and long-term performance. They dig into earnings reports, look at profit margins, revenue growth, debt levels, and management decisions. They want to know, is this a solid company? For example, if you were looking at Apple, you'd study its iPhone sales numbers, revenue growth, innovation pipeline, and leadership. What do you want to understand whether the company is likely to grow and remain profitable over the next 5 or 10 years? Fundamental investors believe that, over time, the market will recognize a good business and the stock price will reflect its true value. On the flip side, technical analysis doesn't care about the business at all. It focuses solely on the stock's price movement and trading volume. Think of it as trying to understand investor psychology through chart patterns. Technical analysts look at candlestick charts, support and resistance levels, moving averages, and indicators like RSI or MACD. They're trying to predict short-term price movements based on patterns that repeat over time. If a stock bounces off a price level multiple times, they might say it has strong support, and they'll buy at that level. It's all about timing. This method is popular among day traders and swing traders who want to profit from short-term price swings. Now, let's compare the strengths and weaknesses of each approach. Fundamental analysis is powerful for long-term investing. It helps you avoid hype and focus on quality businesses that can grow. It encourages patience and gives you a deeper understanding of what you're investing in. But a dose and tea help much with short-term timing. A good company's stock can still fall temporarily. On the other hand, technical analysis helps you find good entry and exit points. It's great for timing the market, spotting trends, and managing trades actively. But it can also lead to overtrading and ignores the company's actual value, which can be risky if you're not careful. Here's something most beginners don't realize. You don't have to choose just one. Many successful investors combine both. They use fundamental analysis to pick strong, long-term companies, and then use technical analysis to decide the best time to buy or sell. For example, you might research and decide that Microsoft is a great long-term investment, but you wait to buy until the technical chart shows it. Bounced off a support level, or just crossed above its 50-day moving average. Combining both gives you the best of both worlds. Deep insight and smart timing. So, which one is better? It really depends on your style and goals. If you're a long-term investor who wants to build wealth slowly and steadily, fundamental analysis may be your best friend. But if you enjoy quick trades, reading charts, and capitalizing on price momentum, technical analysis might be more your speed. And if you want a balanced approach, use both, and let each method play its part. To wrap it up, remember this. There's no one-size-fits-all in investing. Both technical and fundamental analysis have their place. The key is understanding your goals, your risk tolerance, and the amount of time you're willing to commit. The best strategy is the one you'll actually stick with. If you found this helpful, hit the like button and share it with a friend who's also learning to invest. And don't forget to subscribe to Mauuak Saving Tips for more smart, beginner-friendly investing content.